Afternoon, everybody. How are we all doing? Afternoon, Ian, Edward, Steve, Evil, Fletch, Amy, Rico, David, Evans. It's time. David, $5. Hit the like button. Buy all the indicators and EAs. Thanks, David. Much appreciated. As he says, don't be a bum. Smack that thumb. Thank you very much for the $5 tip. Very generous of you. I'm hitting the like button on it. Afternoon, Evans, it's time. Kennelly, Ross, Weether, it's a new one. Senji, Peter, how we doing? Stuff's on the move. RSI Dash lit up like a Christmas tree at the moment. We'll have a look at what's going on in a minute. I've got a bit of a headache today. Somebody sent me down a wormhole. Started looking at this thing. My God. I've never heard of this before, the BBMA strategy. But yeah, basically it's just Bollinger Bands. But it's Bollinger Bands with another 1,000 indicators put on top to make it super complicated, have more moving parts and make it impossible to backtest. So good luck with it if you're trying to trade that. Found a Dropbox with 1,000 charts with lots of different combinations of options. What the hell? But yeah, it's one of those strategies where you take a quadrillion entries by the looks of things, and if you're lucky enough it goes in the right direction, you make £1 million. Otherwise you blow your account within 5 minutes. Anyway, so yeah, not sure about that. Added a review to the PTEA. Thanks very much, Kennelly. Much appreciated. I haven't looked at reviews actually, so thank you for that. Anyway, let's get that off the screen. Right, so today we have got we've had CPI for the Swiss franc this morning, which came out as a 0, which means that interest rates are now, I think, 1% for the Swiss. Uh, 1.2. Not sure that's updated yet. So yeah, inflation dropped again month on month, twice as fast as expected. We had a 0.6. We're forecasting a 0.3. We got a 0. So they knocked 0.6 off of their inflation very, very quickly. So that's going to put quite a lot of pressure on the Swiss to drop that interest rate faster, harder, everything basically. So Swiss franc today had a very, very big, strong push. Not an ADR yet on the US Swiss. The rest of them have. So New Zealand dollar Swiss got a short just going in on that one. Pound Swiss didn't quite get to ADR. Euro Swiss did. I've taken a first short on that, although I'm not going to be holding that for long if that decides to push today. And all the other Swissies basically have pushed as well. So big, strong push against the Swiss franc, which you would expect. So they've dropped interest rates faster than they were forecast to do. And now their inflation figure has dropped faster than forecast. So basically, good chance that they will drop this interest rate further and faster. However, they are very far ahead of everybody else with interest rates. So because this has come down quicker than expected, doesn't necessarily mean it puts the pressure on them to reduce that. They have just reduced it, which will obviously slow this down. So it's unclear as to whether that is going to have a big impact on that Swiss franc. At the moment, the market seems to not want to hold the Swiss, which is understandable after what they did to us with the interest rates. However, doesn't mean necessarily that it's going to fly, because they are, as I say, very far ahead of interest rates compared to the rest of the world at the moment. So we'll see what happens. But all of these Swiss francs today are good mean reversion opportunities. So you can see the dashboard is lit up like a Christmas tree here, RSI. We've got loads of RSI extensions, which are huge. That was the last one I took on the Aussie dollar Swiss here. We're back here again. So we'll be looking for pretty much the same thing. We're looking for a mean reversion play off of the back of this leg up. So got a short on. There's a possibility of getting an ADR to the downside out of this. This is a bit greedy, retesting this level here, which is basically this propulsion gap, which was started to break out. So that's what I would look for it to test. However, that's a much safer play, just dropping sort of 50% on this leg that we've put in today. So stick a fib on it, go for roughly half of that is the safer bet. So there's a few ADRs at the moment, as you can see. We'll look at those in a sec. How long have we got till the news? 7 minutes. So that's the news this morning. We've got unemployment claims coming out at 1:30, so that's what we're on to look at today. The unemployment claims could potentially drive the US up or down today, but more likely we'll get something like that because we're waiting for the unemployment rate tomorrow. So I would expect some movement off of this if we get a deviation, which is fairly big. However, it's unlikely we'll get a sustained move off the back of it, because we're waiting for tomorrow's news on unemployment rate. So we'll see what happens with it today. But the other news today, not really an awful lot. We've had the ECB talking a little bit today, as you can see. Sorry, I've just realised that just came in at 12. I've been checking the news every hour. That's obviously came in just after I checked it. I was just reading that. So fantastic news. We'll look at that in a sec. So apart from that, news-wise today, there wasn't an awful lot else you can see. Obviously, that's the Swiss franc this morning. Overnight news, not a lot. We had the Australian building approvals, but that was it. So this one here, obviously, is key. Japan's former top currency diplomat, Yamazaki. Japan will likely intervene in the FX market if the yen falls well below 152 per dollar. So that's the level I've got on the chart. That's the level I've been talking about forever. It seems like forever anyway. 152. Yeah, so that is this level here, this previous intervention. That's where they intervened last time. So we had an intervention, failure, second intervention, third intervention, drop. So this is the intervention level 152, and that is where we are now. So that's good to know that he's backing Japan to intervene. So we hit that level, obviously 152. The Japanese said, stop it, otherwise we will do something. Well, they didn't, not in any certain terms, but that's what they implied. They hit it again, dropped it, hit it again, dropped it. We've hit it again, dropped it again today. So, oh, sorry, that was yesterday, wasn't it? We hit it again yesterday. So let's get the hourly chart. So we hit it again yesterday. Yeah, 152. And off we came. It's not exactly 152. It's around 152 area. So if we get positive unemployment numbers today, i.e. we get unemployment dropping, which will be positive US, we could get a hit above that level today. So like I said yesterday, at any second, if this drives and rallies and they don't push it back from this level, if it gets through there, there's a high probability of a 400 to 800% ADR move straight down within an hour. So I am short US dollar yen. I'm short New Zealand dollar yen. Second entry just gone in on that this morning. I'm short pound yen. First entry today. I've got a conservative exit on that one because I'm getting a little bit loaded on the yen. Euro yen, I've got short. Haven't got any Swissy or CAD on, but I have got Aussie as well. And again, conservative exit there. So the Aussie yen and the pound yen, I've got small TPs on because I'm anticipating not getting an intervention. If we do get an intervention, that won't get honoured anyway. I'll probably get filled somewhere down here and make a load of money extra. But the US yen, the euro yen, and the New Zealand dollar yen, I've got no TPs on. I'll take whatever we get out of the intervention. So there we go. That's the news this morning. We've got 2 minutes to go until the US dollar news. So as you can see from ADRs today, the Aussie dollar has been on the move. We've got the Swiss franc, obviously, as well. So Euro odd, Euro Swiss, Euro New Zealand, pound odd, pound New Zealand. So New Zealand and Aussie moved together. New Zealand CAD, New Zealand Swiss, and obviously New Zealand dollar yen has moved off the back of that yen movement. That's mainly to do with the New Zealand dollar. So it's all about the Aussie dollar, the New Zealand dollar, and the Swiss franc so far today. We'll have a look at all those in a sec. But we will wait for the news first. My US dollar Swiss trade, I got out of some of this on where are we? Thursday, aren't we? Tuesday. I got out of some of it last week as well. I've been just scaling out of it basically because we are stuck, absolutely stuck. Obviously, we had a lovely push down yesterday, which I thought fantastic. This looks like we're now going the right way. And then this morning, obviously, the Swiss franc news happened. So that's not helped me very much at all. In fact, I might as well watch the US dollar Swiss. See what happens to the US dollar. But as I said, I'm not convinced necessarily that this is going to mean a sustained rally. Ordinarily, you would expect with an interest rate drop, which was not forecast, and an inflation drop, which was not forecast, we would expect a big, strong push against the Swiss franc. But no one else is dropping their interest rates at the moment. So I'm not sure the market necessarily needs to weaken the Swissy any further. We will quite possibly just sit around, but we'll wait and see. Need to give it a couple of days really to see what the market's gauging, but we could well be an A-shaped recovery and be back down here this afternoon if we get negative news on the US dollar Swiss, on the US dollar rather, which doesn't actually look like anything. Looks like it's a forecast. Yeah. So that's probably forecast. 221 on a 213, so pretty much what we were expecting. So ever so slightly negative US, but not going to get any movement off that today. So we'll be waiting for non-farm payroll tomorrow for the unemployment rate. So if we get this intervention move on the US dollar yen, or rather on the yen, if the US dollar rallies again today, that will throw tomorrow out completely because people will be repositioning to get into the yen. So we've got a couple of major things happening with the news at the moment. The Swiss franc, obviously, unexpected inflation drop. We've got the US dollar yen threatening, we've got the Japanese threatening intervention for the last 2 weeks, and the US dollar knocking on the door a lot at the moment, potentially to rally that. So if if the Swiss franc move doesn't hold, they'll probably power into the Swissy. And obviously if this one rallies, they'll power into the yen, which means non-farm payroll tomorrow will be pretty much a non-event. But we will see. We'll see what happens. But so no news on the US dollar there. So we'll have a look at the ADRs and everything and the RSIs. We'll whiz through all the pairs and have a look at everything really, because we need to prepare for tomorrow, obviously, with non-farm, assuming that we're not going to get any movement on the US dollar yen. We were talking about in the Discord, mine went blank then. In the Discord group about trends today and how to define a trend, because I keep saying in here the market spends the vast majority of its time range bound, and about 20 to 30% of the time it's trending. And somebody asked if there was a defined study on those numbers, and there isn't. It's just rough, basically, that I come up with. But if you look at any market, this is a range bound as far as I'm concerned, and this is where what we're talking about. As far as I'm concerned, it's discretionary. whether a market is trending or ranging. You can have an official definition. So you could say, I'm going to use the 72 moving average on the daily. And if we're above that, we are officially trending up. If we're below it, we are officially trending down. So you would say at the moment we are trending down because we're below that level. However, I would argue that that isn't trending anywhere, is it? For the last 2.5 months, this isn't going anywhere. So it's discretionary as to how you measure a trend. You can look at a chart like that and say this is starting to trend down, and you can scroll out and go, no, it's not. It's just down at the lows of the range. It's that discretionary. It's to do with the zoom level of your chart, the time frame you're looking at. You drop down to M15, trending like a loony, isn't it? Until you scroll out a little bit and go, actually, no, it's not. Is it below a moving average? Is it above a moving average? You know, there's so many things you can use to measure trend. Typically, people use market structure. That's a trend, isn't it? Low, high, higher low, higher high. And as long as we put in higher lows and higher highs, that to me is the definition of a trend. Whether you've got a moving average that's going like that or it's miles above it, whatever, it's very difficult to determine, isn't it? So just wanted to kind of put that out there because obviously there is no definition as far as I'm concerned as to what officially figures are for percentages of something trending or range bound. I always use the fact that the vast majority of the time things stay in a range. This is a range. Yes, it's discretionary, isn't it? People will say, God, this is trending like crap. I'll be like, no, it's not. It's just coming back into the top third of the range at the moment. Perception. It's all to do with perception trading. There isn't any official thing. So I class this as a range-bound market. But if you look at that, it's trending like a loony, isn't it? Absolutely beautiful market structure, look. Depending on how you want to draw your market structure in, but you get the point. It's going up. It's above the moving averages. But a daily trader will be looking at it and going, it's just hitting the highs of the range. Probably going to drop from here. I don't know. Anyway. Right. So let's have a look at where we are with everything at the minute. Let me just catch up on the chat. Japanese authorities likely won't intervene in the currency market unless the yen plunges below 155 to the dollar. Former top currency diplomat Watanabe said on Thursday, followed up by top currency diplomat Yamakaze completely saying the opposite to that. Which one do you want to believe? Do you want to believe Watanabe or do you want to believe Yamazaki? One says it's going to do that if it goes above 152. The other one says it's not going to do anything until it goes above 155. So I'd say somewhere between 152 to 155, you probably get an intervention move, don't you? One or the other. Afternoon, Neo, Virginia, Kev. So, so obviously we'll have to wait and see what happens with the yen. Nobody knows. Everybody's speculating. Even the top banks are speculating and disagreeing with each other on it. So whatever will happen. Colombia and Thailand are next to go fully legal for cannabis. Those are huge markets for it. Everyone knows those places have got a lot of cannabis users. Thanks for that, Laura. That's very helpful in a Forex live trading room because it really, really affects the Forex markets. But thanks for your input anyway. What's going on with the Aussie New Zealand? Probably the biggest squeeze of the year so far. It is only March. I don't know what's going on with the Aussie New Zealand. It's it all kicked off with the New Zealand dollar interest rates. So we did not change the interest rates. We were told the interest rates weren't changing. We forecast the interest rates wouldn't change. They went sideways into the interest rates because everyone said it's not going to move. So what they did as soon as the interest rates didn't do anything and did exactly what everyone thought was they sold the crap out of it. And since then, they haven't stopped. Absolutely no idea why. There's no reason for the Aussie to be stronger than the New Zealand dollar. There's no fundamental bias. They're 4.35 and 5.5. Interest rates are not changing. Inflation is coming down at a very similar rate. They've still got very high inflation. Their GDP figures are pretty much the same. New Zealand dollar is officially, well, not quite officially into recession, but very close. And unemployment is high. Nothing's changed. The market, for some reason, though, has decided to sell the crap out of it this month. No idea. This is the problem. This is why I was doing this research on ADR, and you trying to replace the RSI with something else in the short term, because at the moment relative strength is irrelevant. It just isn't doing anything. There is no relative strength in this market. Look, we've had one RSI extension in the last month, and that was off the back of that. Other than that, nothing's happened. But every time it's got extended, it's literally done nothing. If you look at what we've got weeks and weeks of sideways movement. With the odd one day, it moves. That is realistically what you've got. Nothing. Didn't move anywhere for a week after the news event. And then we had a day where it popped up. And then we didn't move anywhere for over a week. And then we had a day when it popped up. And then we sat sideways for 2 days. And we had a day where it popped up. Yeah, we've sat sideways for a week. And now what we're doing is basically for 1, 2, 3, 4, 5, 6 days, we are grinding higher. And we've put in a grand total of 2 ADR. It's just a horrible, horrible, horrible squeeze of a market. But there's no real movement in it. If you look at what it's actually done in a month, it's not actually done a huge amount. It's done 299 pips. A lot. In the grand scheme of things. But it is grinding. Yeah, I mean, it's just a horrible, horrible move. But this is the problem at the minute. There's nothing you can do with these moves apart from take losses on them, which is what I'm doing. Just got to take the hits. I've never experienced a market like it in nearly 5 years. Never been. But I keep saying it, and I hate the word. It is unprecedented. We have never traded through an interest rate rise like that. We've never traded through an interest rate freeze like we've got. We've never traded through an anticipation period where the market volatility has dropped by 30% because we're waiting for an interest rate drop, which we have no clue when it's going to happen because they won't tell us. So the market's just not rational at the moment. Mind you, the markets were never rational, is it? But it's just not behaving in normal market structure at the minute. We're getting a few of these squeezy moves. But what will happen is at some point it will drop like a rock very, very, very quickly. But we're going to need a fundamental to do it. Because at the moment, there's no reason for this to be doing what it's doing, let alone coming back down again, is there? So we will see. You need to put your Bollinger Bands on there. Use the BBMA strategy. Put your Bollinger Bands on, and then that'll tell you. Because obviously that knows. Anyway, so yeah, well, I don't know. I'm getting ready to exit some more of this today if it doesn't come back down again. So in fact, I'm going to put... Go 125 ADR. New Zealand dollar CAD, I got out of some today. So we had a lovely push. This is the thing. Look, this New Zealand dollar, lovely move on the New Zealand dollar CAD. So I got out of that position and did some drawdown control on the New Zealand dollar CAD. But the Aussie dollar, New Zealand dollar didn't do that, did it? The Aussie dollar rallied against the New Zealand dollar while the New Zealand dollar's been rallying. Just doesn't make sense at the moment. This market is all over the place. So that's pulling back at the moment, but we've started a new leg up there. So we've got the reversal alert and the retest in there. So looking for a pullback into propulsion to hopefully get a second leg up back in to test these highs. We'll see. Right. So ADRs, I mean, combined with the ADRs and the RSIs today, I think pretty much every pair is extended, isn't it? EuroCAD isn't. That's extended on the weekly. EuroCAD's hit its weekly range. Pound US dollar, US Swiss, US yen. Yeah, so pretty much everything is extended. So there's no point in looking at the dashboards. Everything's off. So what I'll do is we'll just whiz through all the pairs and go through them in order. Just quickly see what the US dollar's doing. There's no reaction. Slight weakness on the US. That's it. So not really any movement at all. So I think we wait until tomorrow, basically, for some movement at non-farm, unless obviously that Japanese yen pushes. So US dollar CAD. Start off with the Aussies, not US dollar CAD, Aussie dollar CAD. We're up at a nice high. We've got a lovely resistance coming up here, which is a kind of triple top scenario. Massive extension. We are extended above the 80 level, or just touched the 80 level. So we're looking for a correction somewhere back down into these propulsion gaps to the downside. First entry taken on this one today, Aussie dollar CAD short. So I'm looking to get out somewhere down there. I'm going to go middle of that propulsion gap. Yeah, so that's within an ADR of movement to the downside. And we've got this little accumulation in the middle here, which basically we rallied from. So looking to get that retested. Obviously, it could come straight back down to the lows, but we'll see. So nice short opportunity, 125 ADR, 75.80 on the RSI on the extension. So just looking for a pullback leg. And then obviously it can do that or that, whichever it wants to. But either way, looking for it to pull back before it makes its next move. Aussie dollar Swiss extended to the upside. First entry on that one. Again, looking to pull back into this area here. We've also got this high here, which we've hit a few times. So this whole area here is a support. So looking to get out before we get to that level in case it bounces to continue on its merry way up as the Aussie dollar is pushing. But we're going to need some Swiss franc strength to help that along the way. So we'll wait and see what happens with the Swissy. At the moment, it's obviously a bit of a beast. So bear with me a sec. Spinning wheel of death I've got over here. Okay. So yeah, Aussie dollar Swiss, looking for that to pull back down. RSI extension above the 80 level. Again, it's the same trade as this. Look, took a second position on it and out. So I was looking for a retest of this level. Didn't quite get to it, but pushing back down. So again, it's the same play, extended, coming down into this level from the RSI extension, and that's ADR 125, just shy of 150. Aussie dollar yen. So short on this one, not looking for a massive move on it. It's a lovely double top potential here. So hopefully we'll get a kind of reversal happen at the highs there. This is going to be impacted by the yen. So it's either going to, the US dollar yen is going to drop. And if that happens, they will automatically just start to buy the yen, which means that this will come down. Or the US dollar is going to rally, and then that US dollar yen is going to get above those levels, and then there's a chance of the intervention move anyway. So either way, shorts only or against the yen at the moment, from a fundamental perspective, that is. So again, just looking for a short target on this one. Got this little accumulation, so I'm looking to test that propulsion gap. Could well come down and test this area or this area down here, which is the middle of that propulsion gap there. Obviously, we could just start to form a range as well, but either way, it's a short. So big extension above RSI there. Look, so 80 level on the RSI. That was the last trade that I took there. Not often you get above that. So 80-20 on the RSI on the hourly, usually very, very, very reliable. So yeah, looking for a push back down, but I'm not going to get too greedy on it because I've got a few other yens on at the moment. Aussie New Zealand, we know about. This thing's absolutely massively extended. You look at it on the 4 hour, we got above that 80 level. So, you know, for this not to have pulled back, we've got bearish divergence here, like abounds. There is so much bearish divergence on this. So bearish divergence basically is where the market makes new highs, yet there is no strength. So whether you use a MACD, moving average convergence divergence, whether you use a relative strength index, whether you use CCI, whatever you're using as an oscillator to measure strength of movement, diffusion indexes, all sorts of stuff you can use. We have got a massive bearish divergence here. So the market is managing to push high on low volume. Therefore, it's highly likely that it will run out of steam. So quite often before we get that, we get a spike out the highs, which is basically the market's last move. And then we get that hammer or shooting star, depending which way it's going, where the market is exhaustion. So the shooting star is basically the market running the highs, finding all the liquidity, running out of liquidity. There's no one else left to sell. And bang, we come back down again. So there's a potential high going in at the moment. This could well be the exhaustion move. But we've had a couple of instances where it looked like it could be the exhaustion move. And as I say, all we're getting is sideways movement after it. So we will see. But I'll be scaling out more of this if it continues. It's just not giving up at all. However, where we are now, obviously, is a previous high. Failing that, we're looking at coming up into this high up here. So we've got this area here, which we've sold from multiple times. Yeah. And that's exactly where we are now. We're just piling through it today. So as I say, this is either going to be exhaustion, and we're going to start that correction leg back down again, the profit take move. Coming back down to test the 2472 area if it's going to continue up, or it's going to do the same thing it's been doing, which is this grindy mess and then rally. I mean, it hasn't really put moves. It has. This is a fundamental shift here in bias. When you get that sort of move, it can obviously go a lot further and a lot faster and a lot harder. However, it will always correct itself. It has to, because you just run out of people that are willing to sell. So that is coming. It's whether or not we're going to get it from here, as we have in the past, or we're going to need to come all the way back up into the 110 level, which for me is going to be too stretched. So I'll be scanning out some. Aussie US, again, same thing, massive extension on the Aussie US. We're coming up into the propulsion gap. We're above the 80 level, really pushing up hard at the moment. So just about to start that rollover potentially back into this propulsion gap or this one here. So I'm looking for a quick short play back into there. However, it could obviously come all the way back down again. But either way, that's extended. So we're above ADR. We're above RSI today. Big, strong moves to the upside. CAD Swiss. Let me just catch up on the chat 1 sec. Gold will be bullish or bearish? I have no idea. How would I know? I don't control gold. If the US dollar rallies, gold will go down. If the US dollar drops, gold will go up. There you go. So which way do you think gold's going based on the US dollar? Find out tomorrow when the unemployment figures come out. How much drawdown have I got at the moment? About 18% at the minute. Still in Euro Swiss. We'll come to that one in a minute. Euro Swiss, yeah. I'm out of Euro Swiss. Thanks for subscribing, Iman. Welcome aboard. Quite a ride of the last 4 weeks. Hard lessons, but loving it. The realities of trading. Yes. It's weird because the stock indices seem to be picking up at the moment now. Just as the Forex market is just dying. Well, the Forex market's been dying for weeks, but for months really. But we're starting to get a little bit of volatility coming back into the FX market now. So I think there's a potential for everything to start to pick up. We're waiting for obviously a little bit more news on the US dollar, but we're getting closer to that June date. As soon as we get that June, well, it's basically next month. As we enter into May, they'll start to think about rallying that US back down again in anticipation of the drop. As long as we don't get anything from the Fed, Mester or someone come out, and really talk down that interest rate drop. CPI is not quite there yet. It's it's ticking up, so there is a possibility they'll push that back again. And if that happens, we're going to be stuck again. Just horrible, grindy market at the moment. So CAD Swiss, very extended. Again, big strong move up against the Swiss franc. So this move against the Swissy started before the interest rate change. And obviously, since we've had the interest rate change, the Swiss franc's been very, very weak. Today's inflation figure has weakened it further. And there is potential for this just to carry on. So it's one of those fundamental shifts that we weren't expecting when they happen. Not a lot you can do about them when the fundamentals move against you. Obviously, you get into more and more squeezes. So at the moment, the Swiss franc is bearish. So everything should be a buy against the Swissy. So looking for opportunities really to the downside, ideally opposite to the yen. We're looking to short everything against the yen. We should be looking to long everything against the Swiss franc if you're not already in it. I'm already in, unfortunately, in the opposite direction, but I shall wait and see what happens with it. CAD yen extended to the upside. Obviously, we know what's going on with all the yen pairs. I'll whiz through all the yen pairs at the same time. All of them bearish bias based on yen intervention. If there's no yen intervention, bias is going to be the opposite direction. So basically, the Japanese yen is being hammered. It has been hammered for months and months and months. It's got to the point now, as we know, with the US dollar yen, where the market can't push any further, because every time they get anywhere near this level, as we had again this morning, the Japanese threaten. And they threaten the intervention. And if that intervention comes, it's coming down hard within minutes. So every yen pair, you can look at it from a technical bias as much as you like. If that intervention move comes, it's going nowhere but down. So if it doesn't come, you look at the bias of the rest of the instruments. New Zealand dollar at the moment is very, very bearish. So one of the few pairs the yen's actually managing to get on top of. The pound yen is pulling back basically on that leg down that we had. So again, I got another short on that, just a small quick play back down into this propulsion move. But all yens are the same. I'm not going to change my stance on this until I know whether or not that 152 level is going to kick in. And as I say, all we've had since the 20th of March is no information, basically. Every time we've got anywhere near it, they scream, the market reacts. They scream, the market reacts. And it will keep doing this until one of them gives up. And that will be caused by a news event. It'll either be US negative news, will come down anyway. It will be US positive news. And then we will find out if the yen has got an intervention in it. So we're just sitting, unfortunately, waiting for this. So all the yen pairs, CAD yen, Swiss yen, everything is a short. How you get into it doesn't really matter, because all you're doing is you're getting in and you're holding it until it happens. So you don't really need an entry signal. You just need to hit the button and wait, basically. And obviously, we'll see what happens. But Swiss yen, obviously, as you can see, Swiss is massively weak. So again, yen powering up against the Swiss franc. The euros all stuck at the moment. Again, we've got no movement on the euro. Totally neutral, waiting for interest rate decisions from the US before we find out what they're going to do. So we're getting closer to that date, obviously, but right now we're back down at this kind of low. So this is last month's low. This is the previous month's low. This is the area where the market is not interested in trading below, or hasn't been interested in trading below for the last 2 months. So very good opportunity for a buy. We're not quite extended there at the moment. We've got an ADR hit today, though. So there is an opportunity to get in off of the ADR extension. If you look at it on the 4 hour, you can see the support from a couple of months ago. So it's this. It's actually, this is where we opened in February. And then obviously we've got the low there. We didn't, I mean, it's basically this area here. So February, we attempted to go long, couldn't get anywhere, sat there for the entire month, contracted for a bit, bought, pushed up, price discovery into the highs, failed, back down into the lows, failed, backed up into the highs, failed, range. So right now, you got this area here, which is 200 ADR. So if you go long from here and this doesn't work, it's going to drop. That's where your next lot of buyers are, which started to move up into here. So 200 ADR would be obviously a lovely opportunity for long. If it pushes down, by that time, you're going to be even more extended on the 4 hour. You're already extended on the 4 hour. Yeah, same as that. Hourly, not quite at the moment. So that was that 4 hour RSI extension on the hourly. So yeah, wait and see, but it's a good looking long opportunity at the moment. But news wise, we've got no news on the euro or the odd coming up until next week. So tomorrow it's all about the Canadian and the US. Euro CAD in the middle at the moment. So this is a big, wide, long contracting range, which is expanding out at the minute. We're back in the middle of it, where we've been since pretty much all year. So this is December. This is January. We haven't gone anywhere all year. This is what I mean. We literally, most instruments, we haven't gone anywhere all year yet. We're just stuck waiting for those interest rates. So nasty place to take a trade from, because we could go up there. We could come down and test that. We could come down and test this area. So you got propulsion gaps to the upside. You got propulsion gaps to the downside. Could go absolutely anywhere. So flip a coin. If we get any extensions to the upside, I'll get in short. If we get any extensions to the downside, I'll get in long. Last long I had was there. Can't quite see it. So that was the last entry long. First, second, out. But yeah, at the moment, not doing anything. Euro Swiss rallying at the moment. So got short on the Euro Swiss. So I'm targeting this propulsion gap here, which is 175 ADR. So this is the interest rate change, retest of the interest rate change. So we basically got the low, high, higher low, higher high, higher low, higher high, looking for a higher low in that propulsion gap. It's a very weak trend, basically. So I'm looking for, that would be the extreme, US dollar CAD extended. So that would be the extreme, really, of the range. You've got an opportunity basically anywhere in here for them to buy it again as well. So, but right now, short. So if you want a conservative target on this one, this is an ADR hit to the upside. It's an RSI extension as well. We've got nice divergence. Not really divergence, actually. It's a big, strong move. There is some strength there, not a lot of strength. But so yeah, looking for basically a pushback down on it. If it fails, from where we are, you've got these highs up here. This is a really good support resistance look as well. Got a double bottom there. Hit it again, hit it again, hit it again, broke through it, tested it, tested it, tested it, tested it. Very, very strong level. So good chance that that will bounce from there. But if it doesn't, you're looking at coming up and testing these highs. So it's roughly another 100, about another 300 ADR from where we are at the moment. Euro pound, middle of nowhere. This is the trade that I got into, pretty much first trade of the year back in January. We had one push down, sat sideways for 2 weeks. Then we had this drop. And then since the end of January, so January we basically dropped. Since then, we haven't done anything. And it took me until there to get out of the position. And they sold straight back out of that propulsion move. So at the moment, we are putting in bullish market structure. So we got this low, high, ever so slightly higher low, ever so slightly higher high, higher low. So potentially the euro is starting to power up. But, you know, these moves are taking a week, 2 weeks plus just to get a new leg in. So they're a pain in the backside at the moment. But yeah, there was an option to get in long there, which I'm not in because been in it for 3 months. So I'm flat at the moment on it. It's not going anywhere. So if you get in at the highs and it pushes up, you're not going to get much more, really. There's no reason for this to be strong or weak, either of these. They're both completely neutral at the moment. Neither of them have said with any strength, any indication that they are going to go bullish or bearish in June. We don't know what's going to happen with the interest rates on these two at all. So sideways. Euro New Zealand, got long on this one. Have I got a long on Euro New Zealand? When did I get into that? Today? Why have I got a long on that? That's a manual entry. Total mystery. I haven't taken that with the EA. It hasn't been taken by any EA. I have no idea why I'm in that at all. That's a mystery. I have no idea. I'm long on that. It just happens to be here. I must have put a pending order, I reckon. I must have put a pending order on at some point back here in the last week. We'll have to go back through the live rooms, which is just triggered at those lows, looking for that to be sustained. I have no clue. I don't want to be in long on that, really. I don't think. I'm going to close that. I have no idea why I was in that. Anyway, Euro New Zealand. Yeah, I mean, that might hold that propulsion gap, but we've got very big propulsion moves to the downside to come and kind of retest. The fact we've just broken those lows. Why is that trade there? It's not even an EA trade. I haven't taken it with the buttons. It hasn't been taken by the EA because it would have a comment on it. It's a total manual trade. And it's a very odd lot size. I have no idea. Anyway, so yeah, Euro New Zealand, at the moment, there's no signals on it at all. Last kind of short you may have got as a signal would have been there. Other than that, it's not really doing anything. So just sideways mess. Euro, US dollar, have a sell on this one. First trade taken yesterday. So this was an RSI extension yesterday. We're embedded today. So pushing up at the moment. Just either we are going to continue this market structure to the downside. In fact, that's just kind of broken that double top. So structure's really shifted back now long. So I'll be looking for a pullback potentially to come up and test the highs, but we'll see. This is obviously anything you do with the US dollar. It's all about tomorrow's non-farm payroll. So whatever the unemployment rates are. So either it's going to massively weaken or it's, in which case obviously we'll be scaling in up to there and out when it comes off of the highs, or it's just going to continue on its merry way down. So got shorts on, we are extended, so looking for a push back down into that propulsion gap. It's just about 0.5% profit. Pound, we'll go through these in a sec. Talking about the market being crappy and grindy since back in August last year. Yeah. Since we stopped the interest rate rises, basically, if you think about it, that's when it happened. When we stopped those interest rates. I have to find when was the last interest rate? Apart from the Swiss. New Zealand dollar, wasn't it, at the beginning of the month? There we are. So, not that's the Bank of Japan, Aussie. So August, that was the last interest rate change, pretty much. They all stopped at the same time, didn't they? So, yeah, odd. We are just in a super slump at the moment. 6 months worth. Do I use our ICT? Nope. Don't trade that crap. Go to bollocks. I'm not going to do it. I'm just going to let it wash over me. But if you want to follow the con man, follow the con man. I just sit back and observe. Ghost trades. Don't even know what that means, Brian. That's the broker looking out for you. Yeah. I don't know what that trade was. That was a weird one. Why am I short the EU? Imam, you need to go and watch the Bootcamp. So this is an RSI extension. So it's a short play. Go and watch the Bootcamp. It's all on the website there. Position Trading Bootcamp. Go and watch that. Teaches how I trade. Cott said the trend is bullish. Yep. Probably does. Do you think Cott has any bloody clue what the hell it's talking about? Yeah. Is that bullish? Commitment of traders at the moment means absolutely nothing. You look at the commitment of traders at the minute, and you look at the historical commitment of traders. This thing hasn't changed for a year. Yeah. Their positioning on the market hasn't changed for a year because there is no bias. Yeah. For 18 months, every single country on the planet increased its interest rates because the inflation was going through the roof in every single country. We got to the point where we stopped inflation and every single country in the planet froze its interest rates. The next thing that's going to happen is every single country on the planet is going to reduce its interest rates. The commitment of traders in the futures market has absolutely nothing to do with market movement at the moment. And this is all hedge money. There's no speculative money in here. It's all hedge. You can tell it's all hedge because it hasn't moved. If this was speculative, it would change. It hasn't changed. Doesn't mean anything. Cott used to be, and this is why this is all on my website. Yeah, I've got the bias scorecard, everything. I put this together just as the entire economy of the planet collapsed, basically. This scorecard is basically how the banks decide on fundamental biases. These numbers haven't got above 10 for 2 years since I put this thing together. Just as I got this together and went, right, this is fantastic, guys. This is basically what the banks use to scorecard market direction using COT bias, retail bias, and the main fundamentals. As soon as I put this together, they decided to all go onto an interest rate rally. None of this means anything anymore. None of it. COT, pointless. Doesn't make any difference anymore. Have you seen the fair value gap on gold? Nope, because I haven't got it. Can I touch on drawdown control? No, but there's loads of videos on the website that do. If you look in here, there's that one, that one, that one. Although at the moment, it's not actually going to help you an awful lot. If this market just decides to do nothing but this, not a lot you can do apart from close it. Yeah, aggressive drawdown control works really well at support resistance levels. So, but the problem, so Aussie New Zealand right now is a absolutely perfect aggressive drawdown control location. We are RSI just about extended, ADR extended, monthly resistance, potential exhaustion. If this comes down from here and you get a reversal on M5, M15, probably more M15, yeah, that is a really good aggressive drawdown control spot. But what we're seeing at the moment is nothing but this. It's basically step up, step up, step up, step up. Yeah, there's no market structure. So, but all those videos teach you how to do aggressive drawdown control and how I do it. So, you're in Aussie US. Currently in Aussie US. How could you be in drawdown on the Aussie US? It's done nothing but go sideways. It's an absolute position trader's dream. Since January, you have had absolutely no way you couldn't be. Let me look at my trades on this thing since January. I mean, I've only had a couple actually, but you had a potential long opportunity there. You had a potential long there. You had a short, which I got into there. You had a long there. You had a short there. You're in short now. How can you be in drawdown on it? Since yesterday noon. What? Well, you'd only be in one position, maybe two, wouldn't you? Gone through 2 ADR peaks in 2 days. Drew, I think you're trading a different strategy to me. I got into that this morning. If I'd have got into it yesterday, I would be in 2 positions. If you're in any more than 2 positions, you're not doing this right at all. Go and watch the Bootcamp. You're doing it all wrong. You shouldn't be in drawdown on this at all. Your ADR settings can't differ. There is only one ADR on the planet. It's the average daily range. You can't have a different one to me. It is what it is. I don't know. Can't help you on that one. I don't see how you can be in drawdown on it. I'm only in one. If I got into it yesterday on an ADR extension, I'd be in 2. Unless you're getting in quarter of an ADR apart or something. I don't know. Brian. Poking the bear. It's poke the bear day, isn't it? Everyone's talking about ICT and everyone's getting into their positions too close. I can't help. Pounds. Pound odd. Absolutely tumbling out of bed for the last 2 days, basically. This Australian dollar on the move. We have broken through the support here today. We're 125 ADR, extended on RSI, so there's an opportunity for a long, either a pullback on that or at least a pullback on that potentially. So it's a good-looking long opportunity right now. Not been any entries so far today, but it is a long opportunity for a push back up into propulsion. So that would be the target to the upside. If it is going to continue to drop, you've got a fair old way to go. This thing has got pretty much clear air until you get down to here, look. So these highs here, which we retested, that is your next support. So just be a little careful. On the way down, it should obviously do normal market structure. But there's no reason for this to be catastrophically dropping. There's no reason for this to be powering up specifically at the moment either. So long opportunity at the minute on that one. Pound CAD sideways at the minute, not really doing anything. That's coming out of a previous propulsion gap from there, which we retested. So we're just testing this area again. Hit that propulsion gap. Again, we've got this one at the highs here, which is the break of that low. That propulsion move there. So that and that to the upside, and obviously the downside, we were looking to come back down into this accumulation. But right now, it's bang in the middle of all of it. So no idea. Could go either way, that one. Pound Swiss rallying, obviously, with the Swiss franc. So out the Swiss franc trade there, that was the last opportunity I had. Didn't get in on that one. It moved too fast. Got a short on there, which I got out at break even. Shouldn't have because it worked nicely, but you've got another short opportunity now, basically up here. So we've broken out the highs. If you look at where this is potentially going, we're pretty much there. That is the kind of all-time high, if you like. It's not really the all-time high, but it's the recent highs. So that this area here is your upside resistance. So that's kind of 250 ADR from where we are at the moment and pretty much where we are. So good looking spot for a short somewhere up here. But this is kind of the definition of a trend at the moment, isn't it? Yeah. So this Swiss franc could well continue to stay weak off the back of the interest rates, inflation figures we've had this morning. So could continue to drop the pound, the Swissy, and obviously just grind away. But that is a hell of a move with no profit take on it. So you've got a little pullback there, sort of 38 retracement, and then a leg up. So there's no profit take done on this whatsoever. And we are hitting resistance. So this is a really good spot for a short. We're extended again. But don't get too greedy on it. If you're going to go short on anything against the Swiss franc at the moment, it's kind of, I don't condone break-even stops, because you know what happens with break-even stops. They get broken even. So if this does get into profit, though, on a short, it's one I would probably want to protect, because, as you can see, there's a good chance it's going to continue going the way it's going. So if you want to trend trade it, wait till you get back down into these lows and take a reversal alert long. Pound yen we covered. Pound New Zealand coming down nicely at the moment. So this one's just coming back down into the range low, or potential range low. It didn't quite get extended enough for me to get into this one at the moment, but nice kind of divergence and W pattern going in on the hourly. No reversal alert yet. Be looking for a push back up into that high potentially. Pound US rallying at the moment, so this US dollar really dropping at the moment, isn't it? I know it's sadistic. I'm short on this. I really want it to go long because I really want to test the Japanese. And every time the US dollar drops like this, I'm like, oh. I'd kind of like just to take some heat to see what happens, because if this does that, I've got much more chance of making money than if this thing does this for the next 2 weeks. But anyway, we'll see. So yeah, US dollar dropping at the moment, pound rallying against the US. So this is a nice opportunity for a short coming up. There's multiple propulsion. In fact, this is one massive propulsion move, but that's part of an A-shaped recovery, look. So really, this little tiny bit here is kind of that support break, but it's bearish, obviously, at the moment. So we'll see where we go. But they've bought out these lows again. So we could well just push back up and retest this high up here. So at the moment, it's extended. I haven't got into a short on it yet. Not quite got a signal on it. But it is one that you could easily get into and retest this propulsion move down here. So good looking short opportunity. We're not at ADR today. We had an ADR, I should imagine, yesterday. Did we not? 96, yeah. So 74 is ADR. We got 96 yesterday. So that was an ADR short yesterday. So if you got into that yesterday, you'll be looking to take a second position. But that's your next potential double top, which is basically this area here, which we will find probably limit order sitting at, if they're not going to just put in a bearish market structure and carry on down from there. But again, tomorrow, it's all about tomorrow. Interest rates, unemployment rates tomorrow. So New Zealand is rallying nicely. So I've got out of some of my New Zealand dollar CAD today. So aggressive drawdown control we're talking about. That was an aggressive drawdown control position. I got taken here. Yeah. So the reason I took this aggressive drawdown control position was because this monthly low. Yeah. So whenever you get into an aggressive drawdown control position, ideally you want it to be at a previous level of support resistance. Yeah. So an area that we can see is likely to react. Price has had multiple reactions at this level. And that's exactly what it's done again. So that's why that aggressive drawdown control was on there. So took the aggressive drawdown control, pushed up today, took off one of the positions up there. So banked, I think it was 1400 on that. And then used, so banked 1530 and used 455 of it as drawdown control. So banked 1000 on that move. So looking for this market structure break now, hopefully to rally back up into the previous propulsion areas. So looking for a pullback on that leg. Whether or not it does that, we'll have to wait and see, but I'm looking for a pullback, even if it's going to continue short, to get out up there somewhere. Lovely candle just gone in there, look, wick. So they've just profit taken that leg there. So hopefully we'll get another rally on that tomorrow. But again, it's all going to be about the Canadian dollar tomorrow. So tomorrow afternoon, we've got the US dollar and Canadian dollar unemployment rate. So that's what's going to move that tomorrow. CAD Swiss got one short. Sorry, New Zealand Swiss got one short. Looking for a push down into these highs. Possibly watching that area there as well. So that's 0.5%. So yeah, looking for a push back down on that one. Nice extension on RSI, also a 125 ADR. Again, if you're trading the strategies that I have in the Position Trader EA or the ones I teach in the Bootcamp, this is the same entry. It doesn't matter if you're taking an ADR extension or if you're taking an RSI extension. It's one trade, one entry. Yeah, doesn't matter whether you got in because of that or you got in because of that. You got in. Yeah, so don't overload yourself because it's an ADR and an RSI. It's an entry short. Extended, looking for a pullback. New Zealand dollar yen we've covered. New Zealand dollar US dollar again pushing up with the Canadian. So this one is very much the same as the New Zealand CAD, New Zealand US. It's pretty much the same thing. So again, looking for a pullback potentially into this propulsion, into this high low area there. So looking for that sort of move up into these highs. It's extended at the moment, so you can play it back down into there. But obviously this one is going to move on the US dollar unemployment rate tomorrow. So whatever you do, anything you get into today with the US dollar or the Canadian dollar, it's going to be decided your fate tomorrow afternoon. So you're not going to get anywhere today. It's just a case of waiting for tomorrow. US dollar CAD, that's also extended to the downside. Again, good looking long opportunity. We bought from there. There's this propulsion. We tested, bought it again. We sold it up here. Buy it here again. Yeah, there's absolutely no reason this should be long or short. Neither of these have got a fundamental bias. Until the interest rates are decided on one of these, this is doing that. Yeah, so if you get in long and it decides to pop down here tomorrow, buy it there, and you'll get out at some point. Yeah, there's no reason for this to be strong or weak. It's sideways, as you can see. This is January here. This is January, start of the year. So we had a little bit of a rally beginning of the year. Again, we've gone nowhere. We've gone nowhere on the vast majority of pairs this year, which is why it's been such a difficult year so far. So good range bound movement on this one. So again, you can see how many trades I've taken on this. I've been trading it like a loony constantly. All the ADRs have worked out absolutely perfectly. All the RSIs have worked out beautifully. It's just a beautiful thing to trade. So I should be getting into longs on this today. If we get a push down, I'll be going long. US dollar Swiss in short at the moment. US dollar coming down. Is this Swiss franc powering up as well? Yeah, a little bit of strength coming in the Swiss franc, and obviously that US dollar reacting to the news we've just had for the unemployment. Nice negative move. So propulsion has been resold. There's your M pattern reversal. If you drop down to M15, there will be a reversal alert there. So it's not very clean, but it is a reversal. So that's coming down nicely at the moment. So as I said, this Swiss franc move although it is really negative this morning for the Swissy, after that massive drop on the interest rates that we weren't expecting, I think the market might be a little exhausted in wanting to sell the Swiss. So it might well sit sideways. So if we get negative unemployment numbers tomorrow, coming off the back of two negatives this week. So this week we've had, obviously today we've had the unemployment claims coming out as a negative. Yesterday we had the services PMIs coming out as a negative as well. We had the jolts as normal, manufacturing was up. So at the moment we are biased negative on the news. So the fundamentals are shifting for the US to the downside. If we get the unemployment rate going up tomorrow, that 3.9 comes out as a 4. Again, we'll get a drop in the US. If the Canadian unemployment comes out instead of a 5.9 as a 6, or even as a 5.9, that will weaken the Canadian dollar. And if we can get both of these coming out with negatives tomorrow, we should get a very good strong move down on that US tomorrow. So we will see. If it gets a big push tomorrow because the unemployment rate drops dramatically, we know what's going to happen. It's going to go above 152 on the yen, and the yen are going to intervene and drive the US dollar down anyway. So really not that interested in longing the US dollar at the minute. But we'll see. As you can see, for the last 2 weeks, again, we are stuck, absolutely stuck. And US dollar yen, which we know about, which is more stuck than a stuck thing on a stuck day. It's just stuck, literally. Everything's stuck. Just need someone to do something. Someone just do something. No one's doing anything at the moment. That reverse alert you can see on the screen there has taken 6 days to put new market structure in. And then as soon as it put new market structure in, immediately reversed. Can't do anything with it, can you? US dollar yen, if holding for 8 days, the swap charges are equal to 1 ADR movement. Depends who your broker is, but shouldn't be 1 ADR of movement. Depends what your risk is. You can't really equate it to ADR of movement, but depends what your risk is, doesn't it? Because your swap is based on the lot size that you have on, and your lot size that you have on has nothing to do with the average daily range of the instrument. So yours might coincidentally make it 1 ADR further away for you to get out, but that doesn't mean that doesn't equate that way. But yeah, I mean, it could well be. Swaps on the US dollar yen are, on all yen pairs, are awful at the moment. That's what killed me. Not killed me, but partially killed me holding the yens last month. What was the yen I was in last month? Euro, wasn't it? I know it's US dollar yen, wasn't it? Yeah. So US dollar yen, the one that I got into at the beginning of January, I had to hold that all the way until March. I did an analysis of this. I put it in, I think I put it in the Telegram group or Discord. But the swaps, I mean, it's a profitable trade, but the swaps were unbelievable. So calculate yours. I can't calculate it. Hey, you can't, David, the calculation you're trying to do isn't possible. You can't, if I take a 0.01 on the US dollar yen short, and I hold it for 6 months, it's got nothing to do with how much it costs over an average daily range. First of all, average daily range changes on a daily basis. Second, if I take a 0.01 or a 1.01, my swap fee is going to be dramatically different. So it doesn't work that way. Swap is based on how many lots you got on. So the average on this trade here, average price on this one, I think my average on this was somewhere around there when I got out. When I got out down here, it was like $200. So But it will be the same percentage. What will be the same percentage? It won't be the same percentage. Different brokers charge different swaps. So it's like you're comparing chalk and cheese. My broker isn't necessarily going to be the same as your broker. So anyway, it doesn't matter. Swap is irrelevant. Swap is a cost of doing business. So if you hold a position for longer, you have to get more out of the trade to make money. That's literally the equation. So if you get in here and hold it until here, you'll have to get out there. If you get in here and hold it until here, you'll probably have to get out here to make the same amount of money because the swaps will have increased. That's the equation. I can't really be bothered to calculate it because it's irrelevant. I don't have a choice. If I want to short the US dollar yen, I have to pay swaps. If I want to trade, I have to pay commission and spread. I don't have a choice. So there's just no point in worrying about it. It's the same as opening a shop. You've got rates, you've got electricity, you've got gas, you've got bills. It's a bill. On my scam prop firm, every swap is negative. Really? So if you longed the US dollar yen, they would charge you a negative swap. But yeah, I mean, this is the thing, isn't it? You're not paying a swap because you're not trading. This is the whole thing about prop, isn't it? There is no such thing as swap because you're on a demo account. There's no money being transacted. A swap is an interest rate payment on an overnight hold against two currencies. You're not trading anything. So how can they possibly charge you a swap? There isn't one. There's no transaction. It's all a con, isn't it? It's all a massive con. I've never even looked at that. I'm trying to think, who's a prop firm that hasn't gone bust? I can't even think of any. EA, so they still, because they're not even a prop firm anymore, are they? He says up here, look, please note that accounts we provide to our clients are demo accounts with fictitious funds and any trading is simulated environment only. So if they charge you a swap, they can't, can they? We offer simulated accounts with realistic execution to reflect live trading account conditions. So they don't tell you what the swaps are. Wow. The commission rate is set for overnight swap fees are collected and or paid nightly. Paid. So that would indicate that they have positive swaps. There you go. Our friend Nirav is advertising get funded now. Yeah. Because he owns it. He owns it. Because he sells courses. So yeah, it's just out to make as much money out of you as he can. So yeah. Let's see if he charges swaps. Knowledge base. Oh, he's got a full-on knowledge base. Look. All the same search system. Yeah. It's all the same company providing you. It's all white labeled by the same company. All of this stuff is all a massive con. Binary options 2.0. They don't even have swaps. No, they don't know what a swap is. Good one, Nirav. Go and tell us about your useless retail candlesticks. No, he didn't. It's been proven that he didn't. So all lies. He was working on the main trading floor. Coffee boy. Not as a trader. Yeah. Yeah, but anyway, swaps, I don't know what, there's nothing you can do. Nothing you can do with them. CTI, yeah, CTI would be a good one to look at. I had a lot of respect for CTI before they started selling courses. Yeah, prop firm that sells courses. I know, let's sell them a course that doesn't work so that they can trade with a prop firm. All about making money. All of it is about making money out of you. Rules and FAQs. God. Swap. Doesn't appear. I don't have any information about swaps either, but oh, and they use 8cap, quite possibly the worst broker on the planet. Anywho, yeah, I don't know about that. They charge a huge swap. Huge. Who's that? Which one is it you're with, Dougal? US dollar yen? It's not doing anything for Guinea at the moment. It's doing the same thing it's been doing for the last 2 weeks. Nothing. It's scared. It's a little scared mouse, basically. It was a big roaring lion, and then the Japanese poked a massive gun in its face and said, "Oi, stop it." And it turned into a little mouse. And tomorrow afternoon at 1:30, it will turn into a roaring lion again. And if it's a roaring lion in that direction, it's going to get shot. If it's a roaring lion in that direction, it'll run away from the gun. Not doing anything at the moment. It's just it's just market movement. Look, it's just some of that just going up and down. We're not going anywhere right now, anyway. So US dollar having a negative impact on the news. So we are getting the move you would expect off of red news, which is down, but it's not going to go anywhere dramatic until tomorrow. So tomorrow morning we've got the SMB currency rates and construction PMIs in the morning. So there's not really any news to worry about tomorrow morning. Tomorrow afternoon, I'll be back on again at 1:15 tomorrow afternoon, same as today. And we're going to watch, obviously, what happens with the unemployment rate. So those are the two big ones tomorrow, the unemployment rate for the CAD and the unemployment rate for the US dollar. So we're anticipating a rise in unemployment for Canada, and we're anticipating no move on the US dollar. So overall, those two combined, if we get a forecast, will be negative for both. So it's looking more like a drop tomorrow. But as we know with non-farm, anything can happen. It doesn't really matter. There's an awful lot of news released at the same time, and there's an awful lot of liquidity gets dumped into that market. So it goes wherever the hell it likes. But there's nothing there tomorrow that will fundamentally shift the perspective on the US dollar or the Canadian dollar, bullish or bearish. So we'll see where the market takes it tomorrow. If this Aussie New Zealand pushes past these highs, I might cut a chunk. Yeah, that's what I'm doing. I'm giving it 125 ADR. So this is, if you look at what we've been doing, yeah, so you have a high, you just about pop through it, and you come down again. You have a high, you just about pop through it, and you come down again. You have a high, you just about pop through it, and you come down again. You have a high, double top, high, just about pop through it, and you come down again. You have a high, just about pop through it, and you come down again. That's the cycle that we're in at the moment. There isn't a massive bullish or bearish advantage. It is ever so slightly more bullish. Therefore, you're just going to break those highs. But there's no momentum to follow through because there's no reason to follow through. So we're just pushing back down again. So back down today. But tomorrow, obviously, during the Asian session, we could take this out. So if you are going to, like I have here, yeah, if you are putting stops in place to get out of any of your positions, make sure you take it off overnight. So if this thing's back down here again by the end of the day, I will remove that, take it off, and then I will put it back on again tomorrow, or I will close out manually a position tomorrow. Because if you don't do that, this is what's going to happen to you. Again, this is what brokers do. Yeah, you can see on here, that was my stop loss. So this was an aggressive drawdown control position I took on a reversal alert. That is where my stop loss was positioned. Above those highs, nice distance. This is where the price closed. That is where they stopped me out on that candle. They spread it by 1 ADR. Yeah, in this case, 35 pips. They spread it for the swap. If you leave a stop loss in place overnight, especially on Aussie and New Zealand, they'll just take you out regardless. It doesn't matter where the price is, they will just take you. So if you've got aggressive drawdown control positions on, or you've got positions on that you just want to scale out of some, don't leave it on overnight. Yeah, look at this one here as well. That was my stop loss. Price pushed up to there. I got closed out there. Yeah, they will spread you. This is your broker's job. Your broker's job is to make you press the button. Every time you press one of those, or the buttons up here, which aren't here at the moment, but every time you press those buttons, yeah, your broker makes a spread, a commission, and if you hold it overnight, a swap. Yeah, so your broker's job, literally only job, is to get you to press these buttons. If he takes you out of a position, you're not in it anymore. What do you need to do? Get in it. Press a button. Yeah. So this is what brokers do. This is swaps. This is spreads. This is their job, basically, is taking the money out of your account. So if you put a stop loss in the market, that is basically what you're saying. Here it is. Come and grab it when you're ready. So don't do it. So take it off overnight. And then what I do is, if it's down here, so let's say it's down here, what I do is I'm asleep until roughly there. Yeah. So what I do is, wherever we are roughly there tomorrow, if we're back up here again, I will close the position out myself. Or if we are still here, I will put that stop back in place in case it rallies during the day. Yeah. But don't leave it on overnight. It's just asking for it. Saying that, I do, because I forget. One of those things. It's annoying because you know that this is going to drop like a stone. Yeah, it will do. It will drop like a stone as soon as you get out. I got something interesting to show on UJ Telegram. I don't know what it is. What is that? 12-month high. What's this? A 12-month chart? Yearly chart. So this is a yearly chart, is it? 1999. So this is the highs of 1999 that have been rejected twice, which is the previous two interventions, isn't it? That is the high of 98, 7, 6, 5, 4, 3, 2, 1. 1990. So that's the high of 1990. Oh yeah, you've written it on there. Look, you probably can't see this because it's absolutely tiny. Can I zoom in? Yeah. So this is the 12-month high. So this is the previous two intervention moves that we've had. We've had two intervention moves last 2 years. That's them. This is where we are now. Yeah. We do not go above the 1999 high, 1998 in this case. But the reason I don't personally look at this level of chart is because here the world was a very, very different place. Yeah. You cannot compare what the world was like 10 years ago or 20 years ago in this case to what the world is like now. Just because they sold off there has got nothing to do with now. When they sold off there, the Japanese had positive interest rates. Since around about here, the Japanese moved to negative interest rates. And that's where we've been until this month, last month. Then they moved from the very first time ever from negative interest rates to zero interest rates. So the world is a different place, different situation with different, all sorts of different stuff. But there is a level, obviously, that we've rejected since COVID. The market hasn't wanted to push through. So, and that is the level we are at now, which is the 152. So this is, yeah, so this one here, September 2022, it's October 2022. This one here is October last year. This is now. But all the technical guys out there will be going, yeah, but look at that, Lee. Rising wedge. It's a bull pattern. But you tell that to the Japanese, who will go bankrupt if it pushes above that level, and all their manufacturing won't be able to export their goods to America because they can't make any money on them. This is why this happens, because it's physically impossible for them to transact at that level. Above that level, you can't make money in Japan. It's good for some exporters in Japan. There's certain goods and services that come out of Japan, which it would be beneficial to be up here. Yeah, because they charge out in US dollar. But all of their electronics manufacturing is charged out in yen. What's the biggest export from Japan? Electronics. Matsushita, people like that. Panasonic. Yeah. Those guys can't have it above here because it, but there is the, you know, when you're looking at economics, China doing a hell of a lot more electronics manufacturing now than they were back here. China's economy is moving faster than everybody else's. There is call for Japan not to become the market leader in electronics export for the US, you know, or a major player. So, you know, things have changed. You know, you didn't have, like back here, we didn't have a world war on. Well, a war in Ukraine. We have now. Yeah. So it's, you know, all changed, isn't it? Or did we? When did that start? March, wasn't it? 2 years ago. So we did. Anyway, you get the point. We're different now. Embarrassed to say it, but one of my accounts is with Forex Prop Firm. Forex Prop Firm? Is there one called Forex Prop Firm? Is there a Forex Prop Firm called Forex Prop Firm? There is. Forex Prop Firm. Wow. They paid a lot for that domain, didn't they? What makes Forex Prop Firm different? Nothing. Absolutely nothing. Use code April Fools at checkout. 50% off all challenges. No. You got to use someone. It's a bit daft, but I haven't taken anything off the Aussie New Zealand yet, and it's sitting in 11%. Thinking of giving it until 15% before starting to cut chunks. So if you do back testing on any of the anything basically with the position trader EA or the market reversal alerts EA, if you've got another couple of years spare, but position trader EA, because it back tests at 1 billion times the speed with the same thing pretty much. You back test it with 80-20 RSI, 75-25 RSI, using anything from a half to a 3/4 ADR scaling, 1.1 to a 1.3 multiplier. They all make profit on an individual instrument. You will find a lot of them will go into somewhere between, without drawdown control active, obviously, without aggressive drawdown control, etc. But they will all quite often go into 10 to 15% of drawdown on an individual instrument. So it's whether or not you let it get there. That's the question. That's usually kind of the pivot point. Yeah. So if you've got something that has moved roughly 10 ADR, you'll be in somewhere between 8 to 10 positions on it. If your initial position risk was 0.25% over half an ADR or 0.5% over 1 ADR, by the time you get to 10 ADR, you're going to be in somewhere between 10 to 15% of drawdown, dependent on the lot multiplier you've used. Yeah. If something's moved 10 ADR against you, you can be sure the market's going to struggle to go any further, because there's just not going to be people interested in going the opposite direction. And they will be so unbelievably over leveraged in profit, you know, the opposite problem, too much profit, they will need to take some. You will also find normally that kind of movement will be done over roughly a 1 to 3 month period. Yeah. Look at my euro pound. How long did that take me to get out of? Just over 2 months, nearly 3 months. Why? Quarterly cycles, profit take, reporting. Yeah. So this 10 to 15% drawdown, if you have one squeeze on and everything else is ticking along beautifully, you could hold it to that quite easily and you will get out of it. But it will take still a few weeks to get out of it once you've got to that sort of level. But quite often it comes out a lot faster because you've got a lot more lot size on if you're using a multiplier, obviously. But the problem is if you get 2 or 3 of those at the same time, you can't hold it. It's impossible to hold, which is why it's important to have the exposure or reduce that lot size right down. So, but inevitably it is always the point where you get the drop. Look at where we are on this now. It's pushed up through there and it's wicking. This is where we sold from back in October last year, and they just beat the highs of where we sold from in June, July, and August. Yeah. And again, we bought from roughly the same areas down here. So it's a fantastic spot if you can hold it. But this is where your balls come in. Are they made of metal or squishy stuff? Everybody's different. Mine are softish because I've got out of some, as you can see. Yeah, I'm scaling out because I do not want to keep holding. I'd rather just take losses and reduce drawdown and stay in it for that drop. But you will get to a point at some point where you think I've got to cut it and you just get out. Doesn't happen often, but this year so far, we've had more squeezes in the last 3 months than I think I've had in the last 3 years. Because this market condition, this regime that we're in at the moment is just not something we've traded through before. Stagnation, absolute stagnation and grind. You know, this thing, grind. You just don't get this kind of grindy movement normally. You get market structure, rallies, ranges, big news events which undo themselves. You know, it's just not normal at the minute, unfortunately, but they are massively in profit on it. 12-month chart, they could be gunning for that high from 1990. Yeah. It's difficult to tell, isn't it? It's a very different place now, but we are where we always do it in modern times. So, you know, but it's, you know, this is the thing. I said, didn't I, back here? I think there was a news event here. I don't know what it was. That was FOMC, wasn't it? Was that Wednesday? Probably. That was FOMC, I think, maybe. Or was that FOMC? But, you know, these are news events. You can clearly see these are news events kicking into the market. Tomorrow is the next big one. Yeah, and I keep saying it. And we haven't managed to do it. So it's going to be a really interesting one to watch tomorrow. We will see. Afternoon, Chucks. Are we really talking about my balls? Yes. And squeezes? Yes, unfortunately we are. My average is on on it is at 200 ADR. 200 ADR? Oh, percent of ADR. Yeah. So you know, I'm on this one. I'm well within ADR, but that's not my exit. Look, if I put what we were talking about earlier, yeah. So I've got 3 positions on this. If I put my 3 positions here, just below ADR, and see what the profit is, right? That's $220. That is $80. So call it 300. That is a 250 loss there. So it's not break even, is it? I don't want any TPs on any of this. If this is coming down, I do not want to get TP'd. Because obviously the money I'm paying in swaps. Am I on the right stream? Yeah. Afternoon, Reverend. This squeeze, I definitely feel physically in my stomach. Yeah, you do get those every now and again. The Euro Swiss was mine last month. I had to get out. It's a relief when you do, though. It very, very, very rarely happens. I can think of 2 instances it's happened in the last 4 years I've been on stream. Twice I've had to close. Actually, 3 now. 3 now I've had to close positions completely, including the Euro Swiss. The Aussie, New Zealand, oil, and the Euro Swiss. Those are the only 3 times I've given in and gone, can't do it. Can't take it anymore. And those are losing months. They happen. One thing I did that improved my position trading was going to 12 months time frame to decide whether to be long or short. Only or both. I don't. The thing with position trading is you can. I have proven this using these moving averages. Yeah. So if you use the market reversal alerts EA, it's got an MA filter. Market reversal alerts EA. It's got an MA filter in there, so you can say only take shorts when we're below a moving average. You can choose any you like, any moving average you like on any time frame you like. Yeah. It doesn't make any difference because when you get in shorts here, because it's below the moving average, it will go up. So you're wrong temporarily. Yeah. If you then go long here, right? So we've pushed up above this level and then you go long here because we're above the moving average, you're wrong. So you go short there because you're below the moving average. You're wrong. So now you start going long because you're above the moving average. You're wrong. This is why trend traders get killed, because by the time you have identified a trend, and 99% of the planet uses these stupid lines, yeah, by the time you've identified you're in a trend, that trend is over. We've pushed down, we've pulled back, we've pushed down. Hey, look, everybody, we're in a trend. Oh, doesn't work. This is why trend traders get killed. Yeah, every now and again, you will get a trend long enough that you can identify it started and actually get in, but you will never capture more than a third of that trend. In which case, then just go long and short all the time because it doesn't matter, does it? If it starts trending and that bit there is unexpected, you just scale into it and wait for them to get out. Wait for the pullback. Yeah, it just doesn't matter. Trend filters work sometimes, but they don't work other times. And there was no discernible edge, which is why it's not in the position trader EA. There was no discernible edge in that strategy. Yeah. So on the website, there's 3 strategies for mean reversion. Yeah. We got that one, and obviously yesterday's high-low or ADR reversals, kind of similar-ish things. But this mean reversion doesn't give a monkeys about trend. This one does. The results between those two are virtually indecipherable. Yeah, this one just goes short. Look, it's wrong. So you get in short there Brilliant. You get in short there. Brilliant. The next time you get in short there, it does that. Market structure shifts to the upside. You're wrong. So you see, you're suddenly sitting up here in a short position with green moving averages. Going, why did I get in short? Well, because it was red at that point. It's the same as an arrow, isn't it? Yeah. If I gave you an indicator now, if I removed these ribbons from the chart and I gave you an indicator, and all it did was it put up in the top left-hand corner here, it put either a down arrow or an up arrow. And it said, that's trend. Would you pay any attention to it? Maybe, maybe not. It's exactly the same as paying attention to this. Doesn't mean it's right, does it? It means over the last 24 days and 72 days and 200 days, this has been going down. What's that got to do with today? Today, right, so let's look at a prime example. US dollar Swiss. Actually, this one was actually in a green at the time. So not a great example, but let's say that was red. I mean, it wasn't going anywhere, was it? But if that was a red moving average, when that interest rate dropped, it's got nothing to do with the direction of price on that day. That day, the direction of price was caused by the Swiss reducing interest rates by 0.25% without telling anybody. And if it was down here when they did it, or let's say it was here when they did it, it doesn't make any difference. Shifts. Yeah. What does the market do? Sells and buys. Buys and sells. So when it's bought, what's it going to do next? Sell. Why would you want to get in long when it's ready to take profit? There are reasons, but none of them work any better than anything else. Flip a coin, same odds. Use this clown's strategy, the BBMA. Use that. Yeah. Just because this thing has come down and poked out of a Bollinger Band and pulled back to a moving average and poked out of a Bollinger Band and pulled back to a moving average, when you get in down here and it pokes out the Bollinger Band, moves back to the moving average and then does that and goes the other way, you're wrong. What's the odds every time a signal is given on that chart? Difference, is it? This is basically, and this is why my head was hurting earlier when I was trying to read through and understand this thing. They're using a mean reversion indicator with a trend indicator. So they're using one indicator that's designed to tell you when the reversal's happening, combined with an indicator that's meant to tell you when a trend bounce is happening. They contradict each other. And there's people trying to turn this into a position trading strategy because somebody mentioned it in Telegram. And I'm like, I assume that's a mean reversion strategy. Didn't get an answer. Not a mean reversion strategy. It's meant to be a trend following strategy using a mean reversion indicator. That's probably why people are going and jumping on board with it, because it's different. That's what you do, isn't it? You find something different you've not seen before and you go, whoop. Still got the same odds as everything else. I'm going to ask this question and hide under the sofa. Hang on. MREA, basket trading settings. Do I need to put 3 or 300 in the field, close in profit at percentage of ADR? I don't know. Go and look at the manual. I don't use it. That input. Go and look at the manual. It will tell you. But I honestly don't know the answer to that one, FTNet. The manual covers it. Go and look at that input in the manual and it will tell you what to enter. I'm going to hide under the sofa asking this question. How can I change the lot size on the PTEA if I want to use button mode only? You can't change the lot size because the risk is done on a percentage of ADR. So if whatever you're trading, you are going to be using either a fixed lot size. So what's the question? How can I change the lot size? Well, if it's your initial trade, it will either use the fixed lot you've entered or it will use a percentage over ADR. If it's an additional trade that you're taking, it will use whatever the next trade should be. So on my euros did I get into today? Euro Swiss, yeah? So on my Euro Swiss, the next short will be 0.58 lots. So if this pushed up to there and it did that, and I thought I want to get in here and it hasn't got to there, and I hit that button, it will use that lot size because that's the next lot size. If you don't want it to be that, why have you set it at that? Would be my question. So if you say, actually, I don't want to take a 0.57, I want to take a 0.9, then you would go and risk more. It would probably be something like 0.8 in there. And then it would adjust that to when it ticks. Typical, the market's gone to sleep. While I'm trying to demonstrate something, there we go, ticked. I might have to change time frame. Oh, it's a lot. Sorry, I've changed the wrong input. Lot multiplier is one you want to change. So if we change that to a 1.7, because it's the second, because it's not the initial trade. That's the initial trade. This is the additional trades. Yeah. So if I change that to 1.7, that now becomes 0.81. That's how you would change it. Yeah, the EA is designed, if you're using button only mode, yeah, the idea is you're just wanting to take manual trades. It's still going to use the same settings as you've got in here. So whatever you set this to be is what you've set it to be. The idea behind button only mode is twofold. One, I'm not in this. I fancy being in it. I need to get in it. I want to risk 0.5% of my account over one ADR movement. Press the button. Or I'm in a trade. It hasn't quite got to where I want it to be. And I want to take a second trade. So I'm going to take one here myself. That's it. Manually. So it's, like I said, it's got up to there, right? So it's got to be above that line to take the next trade. But it's here and it's hit a lovely resistance. We've bounced that 4 times. We've hit it and it's started to bounce and I've gone, screw it, I'm getting in here because I think it's going to bounce again the same as it did last time. But you don't want to change your lot size. You want to follow your trading plan. If you're getting in with that and you're using a lot multiplier of 1.1 or 1.3 or whatever, or no lot multiplier, that's the size you use. Your risk is automatically calculated by the EA. You shouldn't be using anything different because that's the risk. Yeah, it still looks at the lot sizes in the input. Yeah, and obviously on your VPS will then just take over and do everything. All this does is basically, when you got that set to true, it doesn't do anything below the line. Yeah, so it won't take additionals, it won't exit, it won't take ADR reversals, it won't take RSI extensions, it won't do aggressive drawdown control, it won't do normal drawdown control, it won't do anything. It will just wait for you to press that at the next available lot size that you have set here. I should have a big thick line, shouldn't I, there, that says disables all other functionality below the big thick line. Risk, it will take that into account. Lot multiplier, it will take into account. But it just won't do anything else. Nothing automated, basically. That's the whole point. So like these people that want to trade this BBMA strategy, there's a Bollinger Band here. We've gone outside it. It's pulled back into the moving average and they want to go long because they think it's going to continue up. So they will basically hit the buy button. And then if it's wrong, they will turn it into a position trade, because what it will do if they're wrong is it will come back down to the lower Bollinger Band and bounce off of that, which will actually be a price level, but they'll be thinking it's a Bollinger Band. And That's what they will do. But they will use this to get into the initial trade in their strategy. But instead of using stops, they will turn it into a position trade. But I wouldn't do that with any trend following strategy. I'd do it with a mean reversion strategy. You could do it with a trend strategy. I mean, it'll work, won't it? I mean, if you bought here and we were expecting a pullback from here and it didn't happen, it would probably pull back into there, wouldn't it? So you can trade with the trend, do whatever you like. That's the whole point of the buttons. Do what you like with them. But what it won't do is stop you out of the market if you're wrong. It will manage the position. But you would need to look at any strategy you use with the Position Trader EA. You need to do manual back testing. So you need to get it in the back tester. And I forgot I was running an optimization. How many? Crap. Yeah, run it in the back tester and trade your strategy in the back tester using the buttons. And test the drawdown. Yeah, if you get into it and for some reason it goes hideously against you after you got into that initial position, probably not a good position trading strategy. But that's the whole point of it, having these available to you in the back tester, so you can back test your own strategies and turn them into position trading and close them out when you think you would have closed them out, rather than waiting for it to hit a target or whatever. So anywho, right, so that's me for the day. As I say, I don't think we're going to go anywhere today. We're waiting for tomorrow, aren't we, for the unemployment rates. So everything's just, we've had a little bit of movement on these Aussies today. But that's really all we've had. And not in the right direction for me, unfortunately, for these Aussies. So we'll see what happens over the next 24 hours. But tomorrow afternoon is going to be the big mover. Right, I will be back tomorrow at 1:15 for the 1:30 news. Anything you need before then, let me know. I'll be in Telegram. I don't think you'll find we're going to get anything much overnight, but we might get some more threats from Japan. But I would suspect we are probably just going to wait until tomorrow afternoon. So just make sure if you've got any stop losses in place, you remove them overnight. And then obviously we'll see where we go tomorrow afternoon. But at the moment, the forecasts are potentially for negative. So if we get what's forecast tomorrow, we should get negative movement on the US and the CAD. So we will see. We'll see what the numbers come out at. But looking like at the moment it's not going to push for that intervention on the yen. So we'll see. All right, so have a good day. Anything you need, let me know. Other than that, I'll be back tomorrow afternoon at 1:15. Have a good day.